Hey folks, and welcome back to another video today. We are talking about a stock that might have the biggest potential anything we have covered on this channel. And yes, that includes Palantir and also Nvidia. Now, over the past few years, we have seen people make a lot of money in the market. But if you ask some of the average retail investors what the secret is, they're going to get it wrong. They will tell you to buy good companies and hold. That's a good answer if you want to make some money. But it's not the secret to make generational wealth. The real secret is simple. Buy great companies that are currently misunderstood and completely mispriced by the market. Let me explain what that means. A company is mispriced when the business is getting much stronger, but the stock price stays the same because people are focused on the wrong things. So look at Palantir in early 2023. It was $6 and everyone was afraid. It was heavily undervalued, and since then it has done thousands of percent. And my philosophy is finding those wowzers business that the market just doesn't understand. And that brings me to the main event, Tesla. If you look at the last 5 years, the S&P 500, which is basically the 500 biggest companies in America, has returned about 80%. Absolutely crazy. But look at Tesla. Over the same 5 years, it has lagged behind that average by over 20 points compared to the S&P 500. It has been the weakest part of many portfolios. But here is where the logic gets interesting. If I showed you a massive company where the free cash flow, that's the actual cash left in the bank after paying all the bills, increased by 275% in 5 years. Its revenue increased by 240% and the debt was reduced by 10%. If the business is growing this fast, but the stock is still lagging, what would you say? You would say, Joshua, that sounds like the pretty sweetest deal I've ever heard. And there's always the 100% correlation between the business getting better and the share price in the long term. I call this the rubber band effect. Imagine the fundamentals of the business are moving up, but the price is staying flat. The rubber band is getting tighter and tighter. So eventually the rubber band snaps and the price catches up to reality of the business. That is the moment we are hunting for. So before we continue, hit all the buttons. It helps me grow the channel. My name is Joshua and I don't want you to buy or sell any stock. I just want you to give you this valuable information that you can use for your own decision making. So now let's talk about why the market is wrong about Tesla. Tesla is being mispriced because people think it's just a car company with shrinking margins. They see competition from China and they panic. But they're missing the 3 pillars where the world is heading. First is FSD and the robotaxi network. In Austin, Texas, the pilot program is a success. And Tesla just started removing the safety monitors from the cars. So this is the moment a car stops being a cost and starts being a worker. So instead of just selling a piece of hardware, Tesla is turning the car into a high profit software service. And this means every month users pay for intelligence of the car. And we are talking about 80% software margins. And that is a $1 trillion industry alone that most people are actually completely ignoring. And secondly, it's humanoid robots. We are talking about a $100 billion market by 2030. And many people ask, why would a car company build robots? The answer is, it's the silicon brain. If you solve how a car moves through a street, you have actually solved how a robot moves through a factory. And Tesla has the battery expertise and the AI brain to win this. So while the car business is stagnating, especially in the news, and the robotics business is being born in the shadows. And one more thing, the third thing, energy. Tesla Megapacks are massive batteries for the electric grid. They are already the hottest product in the energy market. And with the world building massive AI data centers, the grid needs storage. The business is growing much faster than the car business. And when you combine these three, the car company narrative is completely dead. You're looking at a global robotics and energy utility. So now, please don't mortgage your house and buy everything tomorrow. Tesla is a violent journey. There will be delays. Elon will probably say something that makes the news look bad. And the path will be chaotic and very messy. And in the short term, stocks are very dangerous because people trade on emotion. In the long term, these fundamentals always win because they are based on reality. And the only way to win is DCA, dollar cost averaging. And this means buying a little bit every month, no matter if the price is up or down. DCA turns this volatility into your best friend. It allows you to use these downturns to lower your average cost and increase your firepower. This is how we made money on Palantir, and this is how we will do it again. Don't worry about the share price today. Worry about the logic of the business in 2030. I am very optimistic. And because I just see the logic behind the rubber band. Tesla is a great business and getting better and better. And the market is giving us a gift because of this temporary misunderstanding. My final thought for today is that my goal is to be a content creator full time and increase the quality for you every day. And if you want to support me on this journey and help me build this mission, feel free to follow me on Patreon and become a member. Your support helps me stay independent and truth seeking, so I can continue to provide this logic to you. But what is logic? Do you think the rubber band is your snap? It's about to snap? Or are you still worried about the short-term noise? Let me know in the comments. Stay rational and stay optimistic. I'll see you in the next video.